Hello everyone, today is day 11 of the 30-day challenge that I'm doing with the Capital Leap program to raise at least $1 million from new investor partners in my real estate business. Today I want to talk about the stock market. Usually I just talk about real estate, and people who have all their money in the stock market probably wonder what I think about that. Some of them have asked me that, and some of them have just told me that the stock market is better. And I can understand why they would think that, because this year, it's in the last 12 months, it's up about 15%, which is fantastic. And I think in general, the stock market is great. I don't have personally a lot of money in the stock market because I am an active real estate investor. So I know I can do a lot better than the stock market in running my regular business. But as a passive investor, the stock market is definitely an important investment opportunity, and I would definitely not recommend that you just go out and sell your stocks and invest them in real estate. I think it's very important to be diversified. So we all know that the downside of the stock market is that your account can suddenly plummet in value. It can go down 10, 20, 30, 40% immediately, or worse if you're just invested in specific stocks and not the entire market like the S&P 500, your value can go to zero. And so that's a scary thing. Whereas with a real estate investment that's at a fixed rate of return, that's secured by a property, you know exactly what you're going to get, and you know that the value of your loan balance or your investment balance is not going to change. So if you like the stock market, I would say absolutely keep it as a part of your portfolio, but I do recommend to diversify, have some things in fixed rate of return investments like real estate, and others in growth type things like the stock market. But if the stock market is keeping you up at night and making you nervous because you know that you might lose all your money when the stocks go down suddenly, then at that point I would look at taking your money out, not wait till it goes down, but take it out and do something with the fixed rate of return. However, for those of you that like the stock market and want to keep your money there, I recently learned from my mentor Bill Allen, who's the leader of the Capital Leap program that I'm doing this 30-day challenge with. He has raised a lot of money with investor partners, hundreds of millions of dollars. And some of his investor partners get their money through what's called a securities-backed line of credit. I had never heard of that, so I just researched it a little bit. And it's basically where your brokerage, where you have your portfolio, will give you a loan that's secured by your portfolio. So if you've got $1 million with Charles Schwab, they might let you take out a line of credit up to $600,000 that's secured by your stocks and bonds or whatever's in your portfolio there. And now that sounds super awesome, and would definitely be something worth looking into. But my understanding is that it's usually a variable rate that you get on your line of credit. So I probably wouldn't recommend borrowing money at a variable rate and then investing at a fixed rate, because if the variable rate goes way up, then suddenly you're losing money. So that's not a good idea. But apparently sometimes you can get a fixed rate on those securities-backed loans or securities-backed lines of credit. So that would be something that would be super awesome, if you could borrow money secured by your stocks and bonds without having to sell them and face tax consequences, and then borrow at a fixed rate and then invest that at a higher fixed rate. Then you're making the difference. Now that's called arbitrage. That's how the banks make their money, and that's why they have all the tallest buildings in all the towns, is because it's basically free money. So if you could get a fixed rate of return on a securities-backed line of credit, that would be fantastic. So I'm going to do some more research and see how viable that really is. You might have to have $10 million in your account before they'll do that, or who knows what, but I'm going to check into that. And if you are a big stock person and you know a lot about it, definitely leave a comment. Let me know what the feasibility of that kind of thing is. But if you or anybody you know is interested in becoming an investor partner on a fixed rate type investment where you don't have to worry about the value of it going up and down, then definitely reach out, and I would love to have a conversation with you and see if it looks like a good fit.